Good afternoon, everyone. David here. It's 10 to 3 on the 1st of September. VectorVest US, the US market has just opened. Advances and the declines pretty much the same. All of the metrics on VectorVest are saying that the trend is intact. Short-term trend right to the longest measure of the trend, the confirmed up. We look at the American market. That's what it's done over the last little while. And this marked divergence between the price and the breadth of the market, the proprietary buy-sell ratio, still in place. The momentum indicator, the market timing indicator, also showing that divergence. The trend strongly up. I've been using the DEW, which is a proprietary market timing technique this year, and that's the DEW signals. That was the sell signal on the 24th of February and the buy signal on the 6th of April. That buy signal is still in place. Nevertheless, this large divergence is not good. I've spoken about my feelings on many occasions. This time will not be different, and sooner or later we're going to see a strong pullback here. I'm not talking about a crash, I'm talking about a strong pullback. And I just want you to prepare you for it all. Nevertheless, there's a good chance that we can move very strongly over the next 6 weeks or into the American elections. So I've named this very short video the one setup. Is this the only setup that you need? And I now want to have a look at Pins, Pinterest. It's a share that come up in my one of my uni searches, and it illustrates a setup that I've used to great effect for many years. I wish it was my own. It came from the work of an American technical analyst who lived 100 years ago, a guy called Richard Wyckoff, and he named it a Wyckoff spring. And there's two examples here on pins. First example and second example, and if I in fact maybe make this a little bit more, we can maybe get a bit more, be able to see what's going on. First of all, I use two moving averages to define the trend, a 21 EMA and a 55 EMA. Why, you may ask? I have no idea. They evolved over time, but they seem to work. When the 21's above the 55, the trend is good. And also like to see that the share is making money and growing earnings per share. And on this particular share, it was in fact losing money. And in the last reporting period, it started to make money. And as you can see, that coincided with a surge in volume. It's coincided with this move up that we're seeing. So if we go a little bit further back here, the setup is quite simple. The market runs and it breaks an old high and it comes back and kisses it once. Now it then moves up, runs out of money, runs out of buyers, and then pulls back down below the previous low and then springs. Now I've spoken to so many people about this and they laugh at me and they say it's just basic support and resistance. It may be, but nevertheless it's not called a spring for nothing. And as you can see, this one sprung very nicely indeed. Those of you that understand volume will see that in the 2 days prior to the gap there was an upswing in volume here. Somebody got a whiff of that news. Somebody got a whiff of this earnings update before it actually was public knowledge. Now we've got the same thing happening again. And yesterday afternoon at VectorVest, myself, Jerry, and Glenn were on a forum, and Pins was one of the shares that I felt was going to do well, and it broke up nicely yesterday. But I was in the share from here. As you can see, there's this market going sideways. Now it could have moved to heaven from here, but the setup is to wait for a run of that obvious stop loss before it goes again. Sometimes they do move and you miss them, and that means that this setup just didn't fire, but there's enough of these to keep you very happy indeed. And it's been my go-to setup and every time frame from 5 minutes right up to daily and weekly for many a long year. Mr. Wyckoff himself says that he likes to enter at the extreme, where the risk is least and the profit potential is greatest. So it shouldn't make a new high here. And it didn't, apart from that little tail in that candle. It broke up. I pulled in all the breakout traders and then unfortunately nailed them. So it came down below this low and then reversed. So the entry point was just let it reverse. Entry point was the open of that candle. That open was at 34.18. We're already at 37. Stop loss needed to be a tad away underneath that low, which was at 32. So a $2 stop, and already you can have your stop at entry. Maybe take a little bit off. If it goes, it goes. If it doesn't go, it doesn't go. Clearly, it's going to take a day or two probably to get through that old high. So the previous one, a better example, in fact, because there was no what I call a shoulder here. On this one, it pulled back to that last old top, tried to go up, ran out of money, and it had to come back to all the big orders down here. And if you look at it carefully, you'll see that this particular low that my cursor's pointing to now was a tick or two below this one, and that's all it took, because all the stops would have been crowded around that low, and clearly those stops provided ample liquidity for probably smarter money to get on board at a really good level. So that is the Wyckoff Spring. I've used it on Forex, I've used it on soya beans, I've used it on oil, and it's one of the very few things that work in the Forex market. And if it works in the Forex market, it tends to work well everywhere. Sometimes you get frustrated because it'll pull back to this last top, and then it'll go and you've in fact missed it, and that becomes frustrating. But invariably they'll come back, nail the stops under that low before breaking again. So I hope that you find that useful. I think it's really good to in fact look at shares that are trending strongly. I think you want to see earnings per share moving up at the same time. Remember, earnings per share is the engine that drove the share price, and this big move up that we've seen in pins from 25 to 37 was a result of institutional traders loading up, because the share is simply going to make more money next year than it does this year. So 95% of the decisions will be made because a company is going to make more money next quarter than it did this quarter. So don't forget about earnings per share growth. So on pins, we've got three things going for it. We've got the general market is still rising. The growth fundamentals are quite good. If you look on VectorVest, I think that it's going to grow earnings next year at 42%. So the growth fundamentals are good, and the trend is good, and we just now got to find and finesse an elegant entry, and my spring setup does that. So I hope you found this helped. It could be the only setup that you need to make a living out of markets. Remember, our objective, folks, is to make a living out of these. It's not an intellectual exercise. If you want an intellectual exercise, then join the Open University or somewhere. This is all about making money, and to make money you need to risk a little bit to make a lot, and do your best to try and get it right 60-70% of the time to engineer a positive expectancy system. All is good. I'm holding all of my positions in the UK market. I've added to Sylvania Platinum. I've added to AAZ I think on Friday, and I took a little bit of profit on Avast. Apart from that, I'm holding the rest of the portfolio. That hasn't changed since the last time I did a video on here. But as I say, I've added the platinum price looking very good, the gold price looking very good. I've added to those. If I see the gold price breaking out of the little triangle that it's trading presently, then I think I shall probably allocate more resources to gold. But I'll have plenty of time to report on that in the next couple of days. So thanks very much indeed. I hope you found this useful. Bye bye now.